Uranium prices are on the rise, and one US-based company is capturing serious attention: Uranium Energy Corp, better known as UEC. But is this stock the best way to play the uranium boom? In this video, we're diving into the forces driving the uranium market, what sets UEC apart, and whether it's the right stock for investors looking to tap into the clean energy future. Welcome back to Stocks Telegraph, where you get the latest financial market news and updates. If you find value in today's analysis, subscribe to our channel. It helps us grow and bring you more actionable investing content. The global energy transition is rapidly accelerating, and nuclear power is making a strong comeback. According to the International Energy Agency, IEA, nuclear generation is expected to hit record highs by 2025, driven by the commissioning of new reactors across Asia, Europe, and North America. Governments and private sectors alike are recognizing that nuclear energy provides a stable, scalable, and carbon-free alternative to fossil fuels, something that's becoming more critical as global emissions targets grow stricter. At the heart of this nuclear revival lies uranium, a metal with limited global production capacity and a deeply imbalanced supply-demand equation. Years of underinvestment in uranium mining, alongside the depletion of secondary supplies, have created a structural deficit. Demand is rising sharply, but global production remains constrained. In the US, the situation is particularly urgent. Recent executive orders call for a four-fold increase in nuclear energy capacity by 2050, which could push domestic uranium demand from 47 million pounds annually to nearly 190 million. This explosive demand growth has sparked a renewed emphasis on rebuilding domestic uranium mining and reducing reliance on imports, especially from geopolitical rivals like Russia and China. This backdrop sets the stage for companies like Uranium Energy Corp to thrive, as they are uniquely positioned to fill the growing need for a secure, US-based uranium supply. Uranium Energy Corp, trading on the NYSE American under the ticker UEC, is a Texas-based uranium exploration and production company. It's recognized as one of the most established US uranium miners with a unique focus on in-situ recovery, ESR, a cleaner and more cost-effective extraction technique compared to conventional open-pit mining. The ISR process involves injecting a solution into underground uranium-bearing formations, dissolving the uranium, and pumping the solution to the surface where the uranium is recovered. This method causes minimal surface disruption, requires no large-scale excavation, and offers a lower environmental footprint, making it an attractive solution in today's ESG-conscious investing climate. UEC operates two primary ISR hubs, one in South Texas, anchored by the Hobson Processing Plant, and one in Wyoming, built around the Irigaray Central Processing Plant. These hubs process uranium from multiple satellite projects, like Palangana, Burke Hollow, and Goliad in Texas, and Christensen Ranch and others in Wyoming. Beyond the US, UEC also controls promising ISR-compatible projects in Paraguay, including the UT and Oviedo projects, which give the company optionality in international markets. UEC has been on an aggressive growth trajectory over the past few years. In late 2021, the company acquired Uranium One Americas from Rosatom, giving it access to several advanced stage and fully permitted projects across Wyoming. Then, in 2024, UEC acquired Rio Tinto's Sweetwater plant, along with nearly 175 million pounds of historical uranium resources, further expanding its production potential. These acquisitions were fully funded through UEC's balance sheet. No dilution, no debt, a rare feat in the mining industry. They also gave UEC control of two of the only fully licensed ISR processing facilities in the country, with a combined annual capacity of 8.5 million pounds of UT4. UEC's operations are tightly aligned with recent U.S. government policies supporting energy independence. In May 2025, President Trump signed executive orders aimed at accelerating the revitalization of America's nuclear energy infrastructure. These policies streamline regulatory approvals, encourage domestic uranium mining, and fund strategic stockpiling through programs like the DOE's Strategic Uranium Reserve. UEC directly benefited from this trend when it was selected to provide 300,000 pounds of U3OC at $59.50 per pound in December 2022, earning $17.85 million through the Strategic Reserve Program. As of January 2025, UEC reported over $214 million in cash and liquid assets, with zero debt, a rare position of financial strength in the resource sector. This solid foundation allows UEC to fund exploration, expand operations, and acquire assets without relying on external financing or diluting existing shareholders. investors. UEC's recent revenue of $49.75 million handily beat expectations, showing solid execution despite modest EPS of -$0.02. While not yet profitable, the company's revenue trajectory, combined with its scalable infrastructure, points toward improving margins as production ramps up. Compared to peers like Denison Mines, which posted a $16 million net loss, and NextGen Energy, which is still in the pre-production phase, UEC stands out. Even Cameco, the industry giant with a $25+ billion market cap, is operating on relatively thin margins. UEC's debt-free structure and US-centric portfolio give it a clear strategic and financial advantage. UEC's early commitment to ISR gives it an operational edge that's hard to match. ISR projects are more adaptable, quicker to scale, and less capital-intensive than traditional uranium mining. That agility matters in a sector where price swings and regulatory delays are common. Equally important is UEC's hub-and-spoke model. The Irigaray and Hobson plants are fully permitted and operational, providing centralized processing for multiple feeder projects. This model allows the company to activate and scale up production based on real-time market demand, without starting from scratch. Furthermore, UEC's US-based operations offer a geopolitical moat. As tensions rise globally and energy security becomes a top priority, US-produced uranium is increasingly valuable. The company's operations align seamlessly with Washington's push to rebuild the domestic nuclear fuel cycle, making it a prime candidate for additional government contracts and support. Despite the risks, analysts remain overwhelmingly bullish on UEC. H.C. Wainwright has reaffirmed a buy rating with a $12.25 price target. Roth MKM also maintains a buy rating, targeting $10.25. The average price target stands at $10.60, significantly above current levels. Institutional ownership is strong, with approximately 84.5% of shares held by major investment firms such as BlackRock, Vanguard, and State Street. Notably, BW Gestão de Investimentos recently invested over $2 million in UEC, acquiring 300,000 shares. These holdings suggest strong conviction from long-term investors and funds. Uranium Energy Corp offers a unique combination of financial stability, strategic assets, and geopolitical alignment that makes it one of the most promising uranium stocks on the market. Its fully permitted ISR facilities, debt-free balance sheet, and aggressive expansion strategy put it in a strong position to capitalize on the rising demand for US-sourced uranium. Analyst targets indicate meaningful upside, and institutional support continues to grow. While risks remain, from price volatility to regulatory delays, UEC's strengths give it a distinct edge. If you're bullish on the future of nuclear energy and want exposure to the uranium space, UEC might just be holding the keys to America's nuclear comeback. Thanks for watching. Don't forget to like, share your thoughts in the comments, and subscribe to Stocks Telegraph for more high-conviction investing ideas.